If you understand this setup, you're going to have a really good idea of where the momentum is sitting for this week. And if you understand where the momentum is, all you have to do is click a button and stay with that momentum to make easy money. Let's dive into the charts and I'll explain a little bit more of what I am talking about. This ticker is SPY that I'm currently looking at, the S&P 500, and the structure that is currently being built on this is a rising triangle. Extremely bullish. It simply means that we are putting in higher lows and we have a very flat resistance. And so the bulls run up, get rejected, bulls run up, get rejected, and we continue in this game for quite a while. Well, it has been until last week when we broke outside of this and then retested and we came in very strong. So if I delete this, you'll kind of see what I'm talking about. Look at all the lower wicks coming through here. Shows us buying pressure. There's a lot of people paying attention to this chart pattern and it's starting to follow through. So what does that mean? This is a very bullish signal. And so knowing that, you can align yourself with these markets and stay bullish with them, make easy money this week, maybe even over the next month or two in the markets, because everything right now is saying higher. Now, it's also important to understand the levels that the bulls have to hold to continue to validate this setup. And that would be this black line right here. I would mark out this black line by simply connecting this low and this low, draw that trend line, put an alert on that black line, add that alert. So that way you're notified in case we start getting some daily closures below this trend line. Because if that happens, that would tell me that the bulls did not do their job. This was all a false breakout at a new all-time high, and that can lead to huge moves. Whenever the bulls do not do what they need to do, there are a lot of people trapped. It's going to probably reverse and go hard the opposite way. So understand where you're wrong so that way you can simply control your risk. I went ahead and bought this dip and I am excited for this thing to go higher, but I'm not just going to sit back and be like, I hope it goes bullish if it continues to break the structure that it's been built. I know where I'm wrong. I can put my stop in and I can lose small. Trading is not about being correct. Trading is all about the ability to lose small when you're wrong and to win big when you are right. If you can get that mindset and understand that concept, your trading is going to change. It's not about being right. People stay in trades too long because they don't want to be wrong. If it breaks the structure, like, no, it'll turn around, it's not going to. You simply just need to press the exit button and be okay being wrong. So this price action and this setup is giving us a really good opportunity to make a lot of money to the bull side and have a clear line in the sand of where we are wrong so that we can lose small. So this is what I am looking at for this week. I am staying bullish unless we start taking out the low of last week. So unless we start getting below that 565 mark, it doesn't mean that it's over with, but that would be the first swing and a miss, so to say, for the bulls and be strike one. I'd want to see the bulls really hold these EMAs and continue to follow through from the momentum of Friday off of this really nice daily hammer. So let's start diving in a little bit deeper into these charts and figure out exactly what the option market is telling us about the levels that we should be paying attention to this week. So this week, we have huge put levels at 567, 565, and 560. What the heck does that mean, Tony? Well, if we have a huge amount of open interest sitting at those levels, at those strikes, that's usually the big money providing liquidity. It could be a lot of people selling those options. It could just be a lot of people in those positions. The market makers are going to do their best to try to hold it above those levels. Now, if those levels get crushed, all they're going to do is turn around and start hedging their own positions, which is going to be driving the market further in that direction. So these should act as very strong supports and hold the markets up. If they fail, it tends to again lead to strong moves down until it gets to that next level. So we've got 560, 565, and 567 that I am watching for this week especially. If you would like to learn more details of exactly how to do this, I will provide a clip at the end of this video. So stick around and watch that and you can get some more information on it. That clip came from last week's session of our weekly coaching that I teach to our All Access Pass members at Real Life Trading. It's the first link down below if you would like to come join us in our Real Life Trading community. You get 2 weeks completely for free. Come join us, get free training, courses, live trades. Our mission and our goal is to help you to be a successful trader by teaching you to fish, not just giving you a fish. So again, a portion of that last week's session is at the end of this video. So just stick around to the end, watch that, and learn a little bit more about these options. Now to the top side, we have huge call strikes sitting at 573, and then another big one sitting at 580. Now these can fluctuate throughout the week, but at the moment, these are where the big volume levels are at on options. And so I am paying very close attention to the high of Friday. If we start to make moves above the high of Friday, this could scream. And it has the possibility to be a very powerful move. So for my day traders, a move up above that, great day trade. For my swing traders, this could be a decent entry. And again, our momentum should take us up to the next call levels around 580. That'd be a perfect place for the markets to finish out the week at if they decide to go bullish. So your job now is just simply go into your chart, make notes, rewatch this video, put alerts on there, and have an idea of where you should be looking for momentum this week, where you should be looking to take profits this week, and where you should be looking to see if these bulls are actually following through or if momentum's starting to switch and the bears are taking over. Cut everything loose, reverse, and ride that momentum to the bear side. The next ticker that I am watching for this week is NVIDIA. Now, NVIDIA is in a really nice pennant pattern. It has been compressing, it has been squeezing, and it is getting ready for a very, very large move. I am personally waiting on a move up above Friday. The 125.46 level looks really good to me. If we can get a strong close outside of that, it could take off. I'm hoping that we can get a retest and a little bit more of a break and rest before this thing takes off, but it's been compressing for a long time. So keeping an eye out on this downward trend line, the top side of this pennant pattern, it's looking very, very nice. And the expected move of this pennant pattern brings us all the way up to around 170, which could also be the top side of this channel area up through here. So there are some huge moves potentially setting up over the next few weeks. NVIDIA is on my list, and I'm getting ready to ride that momentum and make some really good money to close out this year. So those are levels you definitely want to keep an eye on. And again, will this trade work? Is it guaranteed? No, it's not. I have an edge that's going to let me know, hey, the bulls are showing that they're in control. I just want to stay with that edge. But I also understand where I'm wrong. I have a line in the sand of what I need them to hold, and I need them to hold this upward trend line. So if I get in here, my stops will be down below here, probably down below 110. This is just personally what I am doing. And if we start to break down below this, I understand where to cut. So again, get in around here, get out around here. This is my risk. If I get in here and I get out up here, this is my reward. That's much larger than what I'm risking. And again, that is my job. Set myself up for opportunities where I can lose small and where I can win big. My friends, stop worrying about being correct on trades. You are focusing on the wrong thing. It's a waste of time, and all it does is bring in emotions that don't need to be in your trading. Simply accept the loss. Be okay with winning big and letting that go. Your job is no longer to predict the future. Your job is to simply go, this is an edge, and I have a chance to make $1,000 if I'm right, and I have a chance to lose $300 if I'm wrong. Boom. Rinse and repeat 100 times. You are going to be successful with the 50-50 win rate. That's all trading is. Take the stress off of it. Now enjoy this video of last week's session that I taught in our all access pass here in real life trading, where I teach a little bit more about these option levels, how to find them, identify them, and use them in your trading to help you make a little bit more money. See you next week. So if you were just to open up your options tree and go to today's expiration on SPY, you'll notice this column over here says open interest. So over here on this side is for puts, for this side is for calls, and the strike price is in the middle. Okay. So let's just look over here on calls, and you'll notice that 575 has a lot of call open. So you're looking for numbers that stand out quite a bit. Big time numbers. Okay. So big time numbers. There's a huge one at 572, and there is a huge one at 575. So then if we look at SPY today, check this out. If we zoom on in, look what the resistance levels were when it came to 572. Look how much it bounced off of that. If you look at the call side of things, it's going to act as resistance. It doesn't mean that it can't go higher. but it's definitely going to be an area where the markets slow down. And then you look at 575. Look where the high was coming in through here a few days ago here. Boom, what rejection, rejection, and then look where the high was today, working right into that 575, just staying below it. And so you can use these levels on the options to help you figure out the high probabilities of where the big time resistances are and where the big time supports are going to be. So if we go out to this Friday's expiration, the October 4th, this time that we're recording it, and we take a look at our option levels, we have a huge put amount level sitting at 565. Okay. And we've got a pretty good put amount sitting at 570. So if you came through and you just marked out those levels, so 570, large put strike, odds are it's going to try its best to hold up above this by Friday. And look how well it respects it. Bounce there, bounce here, bounce there. And then there is a very large level at 565, which we haven't interacted with yet. But I promise you, if these markets drop back down, 565 is going to be a pretty, excuse me, it's going to be a pretty strong area for this to hold and bounce, at least short term. And here's the cool thing. If 565 doesn't hold, it's going to probably cascade very, very far down. Why? Because your option makers, the people, the market makers, the ones that are having large amount of size on this. Remember, this isn't $20,000 worth of puts. This is 20,000 contracts. Each contract is ranging around $100, probably even more. You've got a lot of money sitting here at this one strike, 565. If the market makers can keep the markets above this strike, 565, they're going to make a lot of money. If it starts to soundly get below it, they are losing money, and all they do is they turn around and buy their own insurance. They buy more puts, and that causes the market to head lower, because when someone buys a put, your broker normally will come in and short the stock to insure that put. So if we start to break 565 strongly, all your market makers are going to start heavily buying puts, which is going to drag the markets even further. The easiest way to do it is to have them hold this level with large amount of size to control the markets, hold these levels and let them bounce. How cool is that? So use your options broker and get a better idea of where these option levels are at. So let's look at tomorrow's expiration, October 1st. Where are the big option levels sitting? Well, I don't see anything that's standing out significantly. Nothing really. The largest number that I have is 572. So 572 is going to be a pretty strong support tomorrow. And then if I look over here on the call side of things, I don't see anything that's like sticking out to me a ton. So there's not going to be a whole lot of levels to hold there. Maybe 575 again could be another level. So let's go out one more day and see if anything else sticks out. Nothing too crazy. And then on the put side of things, something does stick out. 570 sticks out quite a bit more than the rest. So 570 is going to be a pretty strong support over the next few days. And then we know 565 is a huge strike for this Friday that those people are watching. So you can use the open interest, and again, we'll go over this a little bit more detail, but you can use the open interest on your broker and the options. You type in the ticker, whichever one you're looking at, use the open interest to let you know where the big money is keeping an eye on, where they want to defend, and where they want to start to hedge if it makes it through it, and then it can squeeze. I use this extremely effective on Tesla last week. So if we dive on out to Tesla here, there was a huge amount of calls sitting at 235. So when Tesla looked like this, I put an alert sitting here knowing that the amount of calls sitting at 235 was huge, plus all of this resistance. When we started to break through it and close very strongly on within about an hour or so, I started buying swing trade calls because I figured that the big money is going to have to start buying their own calls to hedge their positions that are losing. And sure enough, it squeezed out And then it just kept on trucking. Boom. And we took our profits. Fantastic trades. And we did that by simply using the options level to let us know, hey, this should reject. And you can see how many times they rejected it. Once they couldn't hold it back anymore, they just joined the party, start loading in, and the thing rampages. So you can use this to catch super large moves, identify profit and resistant profit targets areas, resistances, supports, and use the option markets to give you a better sense of where these markets are most likely going to try to get to, where they're going to hold, and how they can play out.